Okay, so today, traders, I'm going to show you how to take advantage, the true, real advantage of the Trader Samurai. This is the Trader Samurai. It's our setup to get into the market. So it's composed of two entry orders, a buy stop and a sell stop with their corresponding stop losses. So you have a buy stop and a sell stop loss for that one, so we can participate in a rise or breakout above there, and we have a sell stop with a stop loss in case we want to participate in a market that goes down past there. So by using this bracket, we can always be prepared to take a breakout trade. And then by understanding that it's a dynamic trade, and we want to understand that we need to be moving our stop losses up to the current market to lock in profit and to cut losses. So we're always moving our stop loss positive for the trade, whether that be it's always reducing risk, and even in the negative direction. So meaning a negative. I'll show you when we get a risk on position here. So we had a breakout to the long side, and then it came back down to take our stop out, so we're going to replace it so that we always have an active Trader Samurai on, which is, as I said earlier, it's two sets of entry orders with their corresponding stop loss, always bracketing the market with no more than 2% on each side. Okay, so there it is. That's the way we like to trade. We'll go ahead and pause and wait. So price just moved up from this point right there. It did get us in the market, and we were able to take something from the market there to the bank. 18,000. Our account is back up to 315,000. It's a no stressful way of trading. I'm going to show you this on the foreign exchange later. I'm going to show you this on SPY, that's the market tomorrow, because it's a logical. The profit shows up logically because the price moves past your entry point, and since you are on both sides of the nearest high and low, with a bracket on the market, and price is going to move within this, and it might just range bound here sideways for a bit, where we have the chance to bring our buy stop and sell stop closer and closer, such that eventually it's going to break out and get us into a risk on position and move out from there. From there, we know how to manage risk. We take it off as fast as possible. It's that easy, and then we lock in profit. And we're always putting on a trade in front of the market as it's going up, so that we can raise the value for each point value as it goes up. So we like to be narrow as possible, of course, because with this range, and that's just a probability thing, right? I mean, the closer this gets together, this range, the closer it gets together, the more likely it is to get in a risk-on position. We like to manage the risk. We're risk managers, okay? We're traders, but professionally, we're risk managers. So the idea of that is to get into a risk-on position and then reduce risk as fast as possible. It's a so simple process, and I just repeat this over and over and over again. The Trader Samurai, that's what we want on all the time, with open PL or no open PL. This is always to be relevant with the current market. In order to be relevant with the current market, you'll notice that this Trader Samurai will always be on. So right now we don't have any open position right now, but we will. And I'll show you how that evolves, and how we replace each side of the market with these bracketed orders, so that we can always have this trade, what we call the Trader Samurai. It also fulfills what we call happy trading. That is when you have a risk on position and you have a positive profit, you locked in profit up to some point, and you bring in your next. It's just like the scenario right now. but you have a positive profit in a risk-on position, and your next move from that point would be either fold, take your profit to the bank, or raise. If it's going to continue, raise from that point forward. And if you played any poker at all, you know the references I'm using of folding and raising, because fold means take your money to the bank, at least for that trade. It means close that trade out, so the funds come back to your brokerage account, or you add more shares to the position and increase the point value from that point forward. And of course, we'll move stop loss up immediately to that level as fast as we can. We are looking to go with the market when it takes off and leave nothing behind, and we don't want to have any business with anything else. So when we get into a trade, it is exactly 1.5 bars between 1 bar and a half. So I'm saying 1 bar because I have a 1 minute bar, so it's a minute and a half for me to move that stop loss up to break even, or at least to the bottom of your current entry bar, and then after 30 seconds of the second bar, move it halfway down, and in that way you can get down to about 0.25% to 50% of risk on each trade within the first bar and a half time frame. Does that make sense? So in this case, it's a minute and a half. The first minute and a half. If this was a 5-minute chart and each bar represented 5 minutes, it would be 5 plus a half of that was 2.5, so it would be 7.5 minutes. Okay, so it's in that 2.5 bar time frame that I move my stop loss up to about 25 to 50% risk from the original 2%. So I think we can get relevant here by moving this up somewhere, and then I want to get to where this jumped. Yeah, right here. And we want no more than 2% over on one side. These are a little short because our account grew back up to 315. So you'll notice that if you're using the same value over time, when your account grows, what used to be 2% risk is now a smaller percentage. So we have to keep increasing that to 2%. That is to stay relevant with our current account and to stay relevant with the current market. We keep adjusting these stop losses. So I just grabbed it randomly, moved it up because we had a little slippage there. At least I thought I did. So we have 1.38 on the table at this point. And there's 30 seconds. You can move that down. I'm going to move this down here just a little bit. This next fractal. I'm going to move this up just to be relevant, 2%, less than 2%. Now in this way we can add another cell to complete the Trader Samurai on this side. And there it goes. Move our stop loss order up somewhere to break even. And we want to put the Trader Samurai on to complete. So we need the sell side of that trade. Get it close, bring our stop loss in. This is what we call happy trading, when we have a risk on position with a positive profit and we have our Trader Samurai set up such that it's either going to stop us out with a profit or it's going to raise it up from there. So we still have the Trader Samurai on, as you can tell, with the sell stop and corresponding stop loss, buy stop with its corresponding stop loss at the local high and local minimum, but we've already moved into a positive profit. Okay, we've adjusted from that by moving our stop loss up from that leg and then adding another sell stop there. So in this way I've measured the profit move from this point on our account to be at 25,340. The PL, I'm sure, is my understanding, is the measurement on this energetic system. We were able to capture, if it continues to go on, we will capture more as each tick value will be incremented by so much. If it chooses to dip out and run, we now have negative 6.19 risk. Risk is a value given as a portion of loss of your account. So a negative risk is a positive profit. Understand that, okay? Because in the beginning this was a positive 2, meaning 2% at risk. We've decreased our risk. We reduced it such that it went to 0, and then to -1, -2, -3, -4, -5, -6, and then we've responded in kind, such that we maintain our Trader Samurai, moving our stop loss, adding another sell stop, so that we can be prepared for whichever direction the market moves. The market favors the trader who is prepared. This is what we found. We'll pause and wait. So there you go, the market did respond back up and it took us out. We'll come to this position and add a stop loss. So in the last trade we were able to capture 19,000. Our range now, we still have, this is what we started with, the Trader Samurai position, representing no more than 2% on each side, the local high and low, and responding appropriately. We'll pause and wait. This range is, the market's either going to go sideways for a bit, giving us the opportunity to narrow this range by moving our stops, entry orders closer, or it's going to move out of this range and get us a risk on. So I'll let you know. So it jumped right up here. Looked like it was about to break out, but then it's backing off a bit. We can get relevant here. One step up to this point.
So then we can't watch anything until bedtime?
Here we have a risk on position on the sell side, so we immediately move our stop to the open of that bar. And usually when we get a breakout like that and it moves fast, my intent is to get it into the free trade as fast as possible with a little profit. So there's 1% on this trade we've locked in, and I want to reset the Trader Samurai. So we'll put another sell leg down here and bring the stop loss up to lock in our profit. We're responding to the market. It can do one of two things. It's going to go up or go down. It's going to take our money to the bank, or it's going to increase our position and make every point from this point forward worth more to our PL. So you can see we have a Trader Samurai on, and we have a profit, a risk on position. So we take that risk on position, the market moves past it, we reset our Trader Samurai, and we are ready to go. If it takes us out right there, we'll just add a stop loss to this side so that we can be back to our Trader Samurai. And that way the market would have given us a profit. We've had no stress. We didn't predict which way it was going to go. All we're doing is getting prepared and adjusting to the current market conditions accordingly. And that accordingly means according to our position. If we don't have an open PL, a risk on trade, then we are adjusting, meaning we are narrowing our range closer and closer of the Trader Samurai such that we can increase the likelihood of getting into a risk on mode fast. If we do have a risk on mode, then adjusting the Samurai means just like this, increasing the stop loss to lock in profit, and then adding another leg to that side. So we'll pause. So here we are. We're still in this formation, if you will. It looks like it's come up here and just gone sideways, so we might have a range right here. But we'll listen to the market. I'm listening, if you will, to the market by watching this area over here. When those cancel out here, I click on this, I go over here, add my stop to it, It's less than 2%. I know that. Our account has increased, and this amount has stayed the same. So I can increase that to 2%. Stay relevant to our account. Stay relevant to the current market conditions. So now we are in a Trader Samurai position, ready to go for a risk on position, and now another $2,000 to the account. So I mean, if you're getting to a risk-free trade as fast as possible, meaning that you moved your stop loss to the past entry point, you know, break even or better, then you really can't. I mean, trading can't be that bad. So that's the idea. We'll pause and wait.